And we're back. It's Thursday.
Yes,
it's June 12th.
Good morning, Frank.
Good morning.
How'd you come in today? Is it bike season?
I keep biking into work one day and then leaving the bike at work because you just want to walk home in the afternoon.
Boy, do I have a solution for you.
What's that?
It's what I do every day, most days.
But with Divvy.
Divvy.
But
you should lock it
Divvy's
up.
not free though.
It's not your bike. It's free once you pay for the membership. Silly. I will say this is a big qualm of mine now. Summer, I ride the Divvy, have the Divvy subscription, so they're all free for the year.
Okay.
Free for me.
I'll let you continue to live in that world.
And I take them out as long as it's not like 10 degrees or below, or raining or snowing.
Okay, 10 degrees is a little bit of a low cutoff.
Yeah.
10 degrees Fahrenheit.
Yeah.
Okay.
Like if it's in the 20s, I'll take
20s.
Yeah.
Fahrenheit.
Correct.
Still below freezing.
Yep.
Okay.
Put on. You do need gloves. Gloves get your hands,
Sure.
and then you just like bundle up. Anyway, that's fine. All year long, I'll take these bikes. Love it. Stationed right outside my house. Stationed right here. Perfect. Summer messes everything up because everyone wants to take them.
The normal people are riding them. Yeah.
Exactly. And the one right by my house is right by Fulton Market, all those restaurants. So when I'm walking back from work around 5, there are just twice as many bikes as the station. Fine, whatever. When I go in the morning, this morning, 18 stands, all clear, no bikes.
Yeah.
And here is less popular, so they're usually already all full, so you don't have a stand.
Wait, so are you saying do you think that the bikes do you think that people have gotten up before you and taken the bikes, or they just didn't replenish them last night?
Correct, and that everyone from Fulton Market was like, "Oh, I can't drive. Might as well."
I've been drinking. I'm gonna get on this Divvy.
Exactly. All gone.
Much safer.
Exactly. And so it just ruins the supply-demand dynamic.
It's funny. I never thought about it this way, but I have to imagine when they invented vending machines, like I don't know when that must have been, like 500 years ago.
Easily, yeah.
But like
Renaissance.
They probably had a restocking problem as well. Like especially like. I mean, Japan, big vending machine culture.
Right.
Like certain places, I'm sure when they broke that stuff out for the first time, it was like hotcakes. Yeah. And like, and I'm sure there was a lot of like, oh man, like I want my morning coffee, but like they didn't restock it, like, or like it's like 8:30, everybody already cleaned out like the coffee vending machine, or like it's like 2 PM, I missed like the lunch vending machine, everybody ate all the Cheetos or whatever the heck is going on. But Divvy, it's a similar thing where they haven't mastered yet, like, yeah, if it's a certain time of day on a certain day of the week, there's just like no chance you're going to get a Divvy going because there's hundreds, if not thousands of people traversing certain parts of the city. Like most extreme example, like Lollapalooza.
Right.
I'm sure it's like any Divvy stand within a mile of Grant Park is cleaned out after that. But I don't know. That stinks for you. You should talk to Finn, your best friend, and growing rival here at the office. Finn is, I mean, I don't really like to curse that much on the show, but he's a hard ass. Like he's like
he's very mean.
Like almost like a military type. He works in the tech department. I don't know technically what his job is, except for like he's known as the Bulldog. And if you're having a problem with some like tech department, he just gets on the horn with someone and is like, yeah, why can't it be faster?
Now,
we've witnessed.
Who can we get to fix this now?
We've seen email chains.
Are they sleeping? Wake them up.
We've seen email chains where he's asked, why isn't this done yet? And the person responds, it's 2 AM here. And he says, can we get someone else on it then? Does not care if you're in Poland, India, London, anywhere. He's going to get it done.
Job not finished.
I don't think you're going to be surprised to hear this. Finn rides his bike to work every day of the year.
Yeah.
Doesn't matter what temperature, what weather's going on.
And he suits up.
Yep.
He's got his own bike. He's got the clicking shoes, walks down.
Really nice bike.
Very nice. He's definitely weatherproofed, but he makes fun of me. actually, for biking in because
he makes fun of you for a lot of stuff, which
true.
I feel bad. I need to start. We've gone too far. It's like a season of like television. Like I never watched the OC, but I imagine this is what it was like, where it's like one of the characters, like he's got like a drug problem or something, and like it goes like pretty far, and it's like, yeah, this guy really sucks. Like or maybe Game of Thrones, like Jaime Lannister. It's like out of the gate, he's banging his sister. Like it's not going. He pushes the kid out of the window, and it's like, all right, this guy sucks. Like he's mean to his brother. It's not a really good scene.
7 seasons later, decent guy.
He like is behind all of the cabal that beheads. What's his name? Ned Stark. Sorry if you didn't watch the first season of Game of Thrones. It's way too long.
Late. Not sorry at all, actually.
But it's turned with you. I think we're right at that Jaime Lannister turn where it's like, now too many people are making fun of you, and I'm like, oh man, we need to flip this, and like people need to start. Maybe we need to start seeing your upswing because yeah, Finn's after you big time.
He's after everyone, but yeah, he makes fun of me that my bike ride is only 3 minutes long.
Yeah,
he's like, well, that's just silly, isn't it?
I saw him on the way out yesterday, and his son is here, and he was like, oh, yeah, like, this is my son, whatever. Notice I'm not doing a British accent because I'm not racist like you. But but he's like, oh, my son is here, like, meet him, whatever. And I'm like, oh, are you guys going to bike home together? Because he's big biker. And it's now Chicago summertime. And he's like, oh, yeah, of course. But, like, he's got to ride the divvy bike because all the money goes into my bike. I was like... You're the best. Like, not even his son catches a break.
Nope. That's a better interaction.
No. He's got to ride a divvy bike until he gets the money, and then he can buy a nice bike. It's like the Great Santini or like any father son movie where it's just like, you're not gonna beat me until you beat me, and then I'm gonna go crawl into a cave.
That's better than my interaction. I got, good morning, Finn. Oh, this is my Alex. This is Glenn. You don't have to worry about Glenn. So
there are no prospects for you meeting Glenn.
Nope.
No upside to knowing him.
Not worth it.
All right, let's talk about where there also isn't some upside.
Man.
U.S. dollar, it's a fire sale. 100 points higher in euro dollar, although they just gave back about 15 to 20 points in the last, while we've been chit-chatting here about Game of Thrones and Finn and everything else.
Let's can we hop into the platform?
Yeah, let's show people some of these prices because they are lower than yesterday if you're looking at U.S. dollar. Dollar Swissy, now down to 81 and a quarter. I think it was just trading 81.10 a second ago here. Yeah, dangerously close to 81 cents, which get some more data in there and show people how extreme these prices are. Holy smokes, everybody. That's a fire sale.
Yeah, we're right back to lows touched in April, but those lows touched in April are the lows back to 2011. Here we've got the Euro DPEG, a little shake up there, but no real time spent. Yeah, this is uncharted territory.
Euro dollar up at, what did we touch 116 a couple minutes ago?
Yep.
Oh, yeah. There we go.
Yeah, we're looking at the hourly chart. Looks like just kind of a consistent legs higher since the European Open, London Open. Very surprised to see 100-point move from yesterday's theoretical close. But this one, kind of an amalgam of storylines taking place. We had some ECB speakers saying the cutting cycle is over.
Okay.
Perhaps boosting it a little. We also have Iran, Israel tensions in the Middle East.
That was the most American thing I think I've ever seen, which is just like a general lack of confidence over what's going on in the Middle East.
It's Iran, Israel considering strikes against Iran. And the main takeaway here is that is in contrast to what the U.S. wants, how the U.S. wants to unfold. This development would take place without U.S. support. Perhaps some of that flooding into.
So essentially, geopolitical risk heightened in the Middle East. Why is the U.S. dollar getting spanked so hard? Because this is a particular, like I guess, anti-U.S. geopolitical risk increase, if that makes sense. Because we've seen plenty of risk around Israel translated to euro dollar moving significantly lower.
Right.
And now you have, maybe it's partially the ECB, whatever, trading through the highs on this news, volatility very much being translated in an anti-US dollar fashion. Maybe part of it is just we are at those lows for US dollar, and this would be usually translated as relatively unchanged, some volatility in both directions for a pair like euro dollar. But since we're at this extreme, the market is trying to see how far they can press it. But it is an interesting one looking at that, because, I mean, of course you would expect dollar yen and dollar Swissy to be lower today, and they are. But to see the euro dollar piece being the big outperformer is pretty significant. I think another thing that's worthwhile mentioning here, because we're looking at a handful of pairs that have significant carry trades, and we've been talking about the carry trade, and we've been alluding to throughout, like price action risk, not alluding to, speaking directly to it for our compliance people that are watching, because it's very real.
Right.
And yesterday being a Wednesday, is a classic, if you were long dollar Swissy or you were long dollar yen, you probably got anywhere between 3 and 5 points of overnight carry per one lot, which is nice, especially if, I think we crunched some of the numbers on the standard deviation in dollar Swissy, and until the last 24 hours, this has been a market that's really moved 20 to 30 points in a given day since all the volatility of early April. And so when you go from mid-April to now mid-June, you're talking about, oh man, that's 60 days, calendar days, and you're getting, 1 to 2 points of positive carry every calendar day. Oh man, that's pretty nice. And yesterday again, like, oh man, I got maybe 3.5, 4 points. This is the risk here, is geopolitical risk comes out of nowhere. The Swiss National Bank, although I wouldn't necessarily fear them right now, comes out of nowhere. The Fed comes out of nowhere. Trump comes out of nowhere. And you got your 3 to 4 to 5, whatever the point. I'm approximating because this stuff changes, and so I don't want to stick my neck out and say it was exactly 3.75 points last night. It's a nice edge to have. It, like theta,
right?
It's nice to be like, oh, I've got this positive, I got this in my direction. But when you get an outsized move, it's probably gonna hurt you. Of course, you'd want that outsized move to be in your direction, but the U.S. dollar at the lows, the carry trade being in the favor of U.S. dollar, it's a weird dichotomy right now where, if you're a value trader, if you're a contrarian trader, those things all seem to be kind of working in your favor. But keep in mind, in the short term, when prices are at an extreme, people really try to, not people, there's not like some like scam artist behind all of this. This isn't GameStop.
Right.
But the market is trying to see, how far will this go? Is it 116? Is it 81 cents? Is it 80? Is it 79? Even though those are 10-year extremes, we can trade through those. We can go anywhere here. But of course, if you are a contrarian, if you do sell puts into the UNH down move, if you do sell calls into the GameStop rally, whatever the contrarian move is, this is an interesting setup and continues to be one. But in the short term, you might be feeling some pain.
Yeah, good breakdown, because here's right where you would have collected that overnight for the 3-day roll, and you're getting 80 points of movement against if that's your carry trade position. But there you have it. Those are the two outperformers.
Man, look at the non-US dollar section, the popular non-USD. no big moves. I mean, Euro Aussie, that's a little bit of a big move. And Euro Sterling, actually Euro beating up on Sterling.
Exactly. So Euro really catching a lot of this demand.
But just interesting to me that in that USD section, you're seeing, and it was just 20 minutes ago, two different markets that were outside of a full percentage point of movement. And in that non-USD section, a lot of unchanged in there. So it's just the nature of today looks like a US dollar story. It looks like we're going to test the extremes for all of these major currencies against USD. And we're going to see where that rubber band finally contracts, comes back, or if it snaps. If euro dollar is trying to print 116.5 by the end of today, it might be a rough trade into the weekend.
Yep, and we've got we had some UK GDP in line. Didn't really help it against the euro early morning. Euro catching a strong bid today, and the news in 40 minutes coming up from the US PPI coming in. Previously down, dipping into the negative territory for the first time since 2023, it looks like, and we're expected to bounce back. So.
Very cool.
This could add to the mix here. We've got a couple slides if you want to jump into that.
Let's do it.
All right. We got both of them up. All right. Today, looking at what assets are correlated to the U.S. dollar, because this was a popular topic that you were touching on with Paul the other day on the show. Just kind of where are we placed right now in the global climate, the global ecosystem, as to what is kind of dictating these U.S. dollar moves right now. What we just saw overnight, a lot of geopolitical risk in the Middle East, taking a strong bid against the U.S. dollar. So not getting a lot of U.S. dollar demand for that kind of safe haven appeal. But here, looking across asset classes, we've got a little correlation matrix for you.
I haven't looked at it, and I know that it's on the screen in front of me.
Yep.
But I'm not breaking eye contact.
No, you're not. It was actually kind of freaking me out.
Yeah, very intense. I want to guess what assets have you put up here? Because I want to see if I can get at least close to what the correlations are. Because I've run these numbers. I've been around this place, these companies and everything now for 10 years. I've run numbers like this so many freaking times and looked at so many of these matrices that I've got some numbers in the back of my head. Maybe you can call out a couple of the major assets. I'm sure we're looking at gold. Maybe we're looking at crude oil. And some of the currencies that we're looking at, or are we just looking at US dollar?
We are looking at the major dollar pairs.
Okay.
Pitted against S&P 500, gold, crude oil, the 10-year note, and Bitcoin.
Bitcoin. Okay. That's funny. All right. If I'm looking at the S&P 500, I'm going to say there's literally no correlation whatsoever in all of the pairs. And
3 months.
Maybe
this is a 3-month horizon.
Okay.
Sorry.
I take back exactly what I just said. There's going to be an inherent positive correlation between US dollar and S&P 500. And a negative correlation between S&P 500 prices and especially Japanese yen or Swiss franc. How did I do?
Pretty good. Definitely against that Japanese yen and Swiss franc. The dollar has the strongest correlation.
Positive correlation S&Ps.
Correct.
Okay.
Gold.
This is a really tough one.
Yeah.
This one, I'm going to say there's an inherent negative correlation between gold and USD. And I'm going to say the strongest positive correlation between any currency and the gold market is yen.
Very close. Yen, the third most, but you've got the general trend overall. Over the past 3 months, we've seen gold skyrocket, U.S. dollar decline.
Not good for U.S. dollar.
Not good. So this is the strongest correlation on the board. British pound, U.S. dollar, strongest.
Sterling sounds like, is
sounds
sterling
like
some kind of metal?
I think so. Yeah.
Okay.
Sterling silver.
Damn, they
God,
put
you're
it right
good.
there.
Right
Sometimes
there.
the universe puts it right in front of you. All right, what's
Crude
the next
oil.
one? Crude oil.
Take them all,
This
all
market,
at once.
no one has been looking at, and by no one I mean myself, until like 2 days ago, it rallied like $10.
Oh, crude oil. Yep.
It's just been like, oh, it's $65 a barrel. Oh, it's 62 again. It's like boring.
Yep.
Gold is insane, and everything else is insane. Crude oil, I'm gonna say there's a negative correlation to U.S. dollar in there that's inherent across the major pairs, and I'm gonna say positive correlation between crude and like Aussie, maybe CAD, but like I'm gonna say it's probably pretty low.
Right on the low correlation, very uncorrelated to most U.S. dollar pairs,
That would make sense.
but moving more positive correlation with U.S. dollar
Really?
against the safe haven currencies of
Gotcha. Okay.
Swiss franc and Japanese yen. 10-year note.
10-year note.
10-year note.
I mean, the note's going to be pretty negatively correlated to USD. I have to imagine.
This is the surprise of the matrix to me. Very uncorrelated across the board.
All right, I'm going to look now.
Very well done.
Thanks.
Pretty good.
Yeah, Bitcoin, I let's not even waste any time with that. I don't know why you put it up there. I think it's just because you own some crypto and you want everybody
We're
to
looking
think
at
about
asset
it.
classes. You can't argue that crypto is a major asset class at this point.
It doesn't surprise me that Bitcoin is especially correlated to dollar yen and dollar Swissy. Sure.
The bond story.
And that makes sense that there's a negative correlation there between the 10-year note and dollar yen, and that makes sense. And
Much weaker than in recent.
if note prices go up, that's U.S. rates going down, everybody.
Correct.
And so U.S. dollar and U.S. rates tend to be positively correlated. So there's a negative correlation inherent between U.S. dollar and 10-year notes, which you see here across the board with the slight green correlations for Aussie euro and sterling, and the slight red correlations for dollar CAD, dollar Swissy, and then a little bit more for that dollar yen. Wow, pretty stark for gold.
That's what I mean.
Hell.
Yeah, and that's where you have to caveat. This is a 3-month horizon, and you take a step back. And
this might be the highest that I've seen in a while.
Yeah.
When you're looking at how positively correlated it is to pound and negatively correlated it is to U.S. dollar in that pound dollar pair, and how negatively correlated it is to the U.S. dollar in that dollar yen pair. Holy smokes. That's a big one. I know you have some more numbers, so let's run through them because we don't have any more time.
No, that's all right. Just touching on the gold, the main takeaway here, taking traditional commodity currencies here, the U.S. dollar pairs and the crosses, like Australian dollar, Canadian dollar, and pitting them against a lot of those popular commodities, broke out the metals market. And the headline here is kind of reassuring, is that you don't have to look farther into, you don't have to diversify further really than the U.S. dollar gold story as of late. Copper, silver, not showing any higher levels of correlation, and
Pretty
those
green
crosses
across the board for Aussie or Kiwi, no matter what they're trading against, except if they're trading against each other, it looks like it's a wash.
Yeah.
But it's Aussie and Kiwi against pretty much any of the other major currencies, you're going to get that positive correlation to Chinese equities, to the commodities that you have up here as well. Wow.
Yep, and then you've got threw in the Chinese equity story as well. This one probably lower than you're expecting, but maybe subject to some of the trading hours.
I think that's pretty solid.
But there you go. You've got the Australian dollar, Canadian dollar, giving you the purest exposure to Chinese equities over the U.S. dollar piece. A lot of pieces moving for the U.S. dollar, and FX markets always moving. So that'll do it for our correlation study today. And that'll do it for Forex Focus on this Thursday. We've got PPI coming up, and more importantly, we have Tom, Tony, and Vanetta coming up on Tasty Live. Stay tuned.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed, FX marks the spot. Trade it on tastytrade.
Oh yeah. Tasty Nation, good morning.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, free market. Come on, you know we can't